Hey, my friend Colin Neville seems to have popped up. How are you, Colin?
Hey, Scott. How are you?
Doing well. We're still waiting for Eklavya and Rob to pop on, but we can start things off with you. Just your thoughts of what you've heard so far. What resonated the most?
Yeah, great question. Great speakers. Kudos to you guys for always putting on events. I'm biased, of course, because we've had a lot of experience with SPACs of late, both with our portfolio and on the advisory side of our business. I think one of the earlier speakers said it's a tool, and it's a good tool for the right companies. It's not right for every type of company right now, but for companies that are growing fast, that can benefit from telling their story to the public markets in a way that you can't in a traditional IPO, it's a great solution. So. The volume is staggering, what we're seeing. So it's hard to digest it all, but for us, we're really excited about the product. It's a new tool in our kit in terms of Raine's platform, and we've benefited from it on the portfolio side of our business with both DraftKings and Beachbody very recently.
Yeah, you mentioned DraftKings. I think that's where most people perhaps were introduced to the term, just sort of lay people and casual observers, that they complete DraftKings went public via SPAC. Can you take me through as quickly as you can, sort of just process from ideation to completion, what went into that deal?
Sure. It's a long story, so I'll try to make it as brief as possible. If you go back to December-ish of 2018, we were looking to acquire our own sports betting technology, sort of back-end platform, and that was a company called SB Tech. And we negotiated a deal to buy SB Tech. And if you fast forward to roughly the summer of 2019, we were considering different ways of financing that acquisition. DraftKings was spending heavily on marketing, so needed all the cash on its balance sheet for its own.
That was the understatement of the webinar or of our event. DraftKings was spending heavily on marketing.
Heavily means different things to different people. So we thought about financing the transaction privately, and to his credit, Jason Robbins, the founder and CEO, had developed a really good relationship with Harry Sloan at Diamond Eagle. And when we considered the time of taking that company public, and really the merger with SB Tech, which is the same playbook we use with Beachbody, we're using the SPAC to combine two companies. So in a sense, DraftKings and SB Tech merging into the SPAC, it's really a great way to use the product because it provides more proceeds than you could get in a traditional IPO. So we were approached, and it was a lot of work. That's the other thing that I want to underline for your listeners, is that the amount of work that goes into these transactions is substantial. And you can sort of bring in as many advisors and throw people at it, but it's a big strain on management teams. So we struck a deal with Harry and his SPAC and with the guys at SB Tech. So really, it's a three-way negotiation at that point. And then where the rubber meets the road is you go out and you test it in the pipe market. One of your earlier speakers mentioned that that's sort of the governor on the valuation of these deals, because you'll find out really quickly if the deal's going to work or not when you're out and talking to the pipe market and testing this with your public investors. And then from there, we raise the pipe. Then you go through the SEC period where you're getting comments on the filing of the S4. That could be as quick as 2 months, but can drag on longer. And then we finalized that deal and started trading roughly April of last year. So the DraftKings hasn't even been public for a year. It's been a whirlwind, to say the least.
Welcome. All right, welcome, Rob.
Thank you. It's nice to join you guys this afternoon.
Yeah, Brendan and I will stick around. Why don't you hit up Colin with anything you've got?
Great. No, I appreciate it. So, Colin, you kind of led with DraftKings and obviously Beachbody. What is it about the SPAC vehicle right now that you're finding so engaging in the market?
Well, so I have two perspectives. One, as a sort of shareholder in our portfolio companies that have used the SPAC. We also launched a SPAC ourselves in partnership with Marquee, which is the holding company for the Ricketts family, who own the Chicago Cubs, among a lot of other assets. So I can kind of give both perspectives. What I like for Raine in particular is the certainty it provides. Right? So generally the valuation of your company as opposed to going public via traditional route. where you do all this work for 12 months and then you find out what the price is the day before you go public. So there's that certainty. There's certainty of proceeds. Typically, you can raise more money, as I was saying earlier, in a SPAC deal when you layer on the pipe. And it's an optimal way to tell the story. So Beachbody is one that the company has been around for 22 years, the best kept secret, I think, in digital fitness. And of course, COVID has pulled forward what we think is a massive total addressable market for that company. And we're able to tell that in a way that you wouldn't normally be able to do in a traditional IPO. So you have that forward-looking, benefit is one of the major points for us.
So now that you've been on both sides of both acquisition and a SPAC itself, what is it really that you're looking for in a management team for acquisition?
Yeah, great question. For us, I'll just give you Raine's perspective. We have multiple investment platforms. We have a venture capital fund, we have a growth equity fund, we have a hedge fund, and then we've added now the SPAC in partnership with the Ricketts. We don't think of it really any differently than we do any other investment we make, other than it's in the public markets and it's typically a larger company. So we think of it sort of north of $1 billion opportunities. So it gives us another way to play in the spaces that we traffic in, all day in our day jobs. So we're in this for the long term through our SPAC. So as we look for management teams with a long-term perspective, high growth is an area that, is if you look across our portfolio, pretty consistent. Management teams that are aligned with the sponsor is important. And then, the sort of secular tailwinds is we like to be betting on companies that are benefiting from tailwinds, not sort of facing difficult headwinds.
So I would assume that sports teams are benefiting from tailwinds. Again, we talk about this pent-up demand. Everybody's expecting these full stadiums sooner rather than later, hopefully. Your thoughts, Colin, then, SPACs as an acquisition vehicle for professional sports teams. I mean, we're dealing here with sports business here. We heard about, of course, Red Bull and Fenway. I don't think it'll be the last. But your thoughts on where the sports leagues, where owners, and where investors are positioned in terms of SPACs and pro sports acquisition?
Yeah, this is a controversial one. We publicly said in our SPAC and when we went out for an IPO to raise capital that we were not going to be investing in a sports team specifically. I think there's sort of two sides of the same coin. For some of the larger teams in bigger markets, I think it can be a great way to access the public markets. I think the issues that come with disclosure and for the leagues themselves to manage, you get better access to capital in the public markets typically than the private markets. Does that let certain teams have a leg up in financing and sort of league-wide facilities? What happens when these teams trade based on what's happening on the field, which, as you know, is not usually the sort of indication of value of these assets. And then you get smaller market teams that want to be public that frankly probably shouldn't be public because they're local businesses. It gets to be tricky. So for the right assets, I understand the strategy, but I think it's a slippery slope. And typically private market multiples in sports franchises have been higher than public company multiples. So that's the scarcity value you benefit from being associated with these teams in the closed leagues.
I think we're seeing two interesting elements on our side as well. As you're seeing more institutional money flowing into the sports teams and the sports leagues and the types of investment groups coming into it, you're seeing a change in kind of that ownership structure as well. You're seeing businesses, especially if you look at European football, starting to operate more as true businesses rather than just as teams. You're also seeing these teams really become more media entities and more content creators at the same time. And I think it changes the perspective of what we currently think of as a team and currently think of as an acquisition target. The other part that's become interesting with a SPAC is kind of the concept that was touched on in your earlier panel, which is the democratization of sport. That for the first time, you can have fans possibly who have paid hard-earned money and put their heart and soul into a team actually have an invested stake in it.
That's a little different, but that's sort of opposing ends though, right? If you want a sports team to operate like a business, like a public company, but also have fans who don't care if the team makes money, they just care if it wins or loses. There's a SPAC kind of how does that change operating a team, do you think, Colin or
Yeah, look, I think, the disclosure challenge is a big one. Would a team necessarily want to disclose that it's in negotiations on its local media rights deal, and what does that do to the negotiations? Look, there are public sports teams, so there is precedent. But I think it probably generates more challenges than opportunities. That being said, as everyone has noted, access to capital right now, it's very, very cheap. Public markets is typically the best way to access that capital. I can just speak from experience, with DraftKings. We invested in 2014 initially, and the company, we helped them raise about $1 billion until they went public, and that was not easy all the time, especially in the news. The company goes public, has access to billions of dollars of capital almost overnight. So that dynamic, I fully understand and appreciate. And these sports teams, as I think Chuck noted earlier, some of them are under some pressure right now. I think it's a short-term thing. It doesn't give me any pause for concern other than it's a temporary liquidity issue. But I think in general, it's probably not the best vehicle for sports teams. Again, it's a rule of thumb that doesn't apply to everything.
Let's get out on this for Robin and Colin then. Has COVID illuminated opportunity in sports adjacent areas, fitness, tech, media? We're seeing a lot of, like you said, Colin, you said we're not going after a sports team. However, there are lots of SPACs. We're talking about sports adjacent vehicles. All of those things that sports teams perhaps will take out of COVID, lending themselves to opportunities for investors now.
Yeah, I think there's a lot of opportunities in what we'd refer to kind of as the pipes of sports. All of the pieces of sports that go around in the businesses, whether that's ticketing, access control, streaming media, and all of the content elements. We've seen entirely new industries in some regard get facilitated and advanced throughout this process. And that's largely driven by COVID. I mean, teams and leagues and sports entities had to get really, really creative through the process of how they create new revenue streams. And I think that's been exacerbated by the whole process.
Yeah, I couldn't agree more. I mean, it's exactly what we focused on, since we started Raine 12 years ago. These types of what are the opportunities that are adjacent to the on the field or on the court sports assets that are benefiting from the secular tailwinds of media fragmentation and now full transformation in many ways, and trying to make bets on those companies that are going to be the next version of yesterday's winners.
Yeah, I'm not shocked that data in sports betting made it to the top with DraftKings there, Colin. Thanks so much, Colin. We do appreciate it. Rob, thanks so much. Brendan, you stick close. We're going to move forward to the next panel. Our own Corey Leff should be moderating. We'll see if we can get him popped up with Massimo Marinelli, Executive Board Member, Acer Ventures, and Michael Wise, President and Founder of Yield Street. Gentlemen, thank you so much for joining us.